Hello, I'm Bernard Hickey from Eurostoxx and welcome to 90 at 9. This is your morning briefing where you get everything you need to know to start the day in 90 seconds at 9 o'clock, starting now with news that central banks around the world have cut interest rates overnight. Within the space of 45 minutes, the People's Bank of China, the European Central Bank and the Bank of England all eased monetary policy to try and get the global economy going again. It was the Chinese easing that was the real surprise. The People's Bank of China cut its lending rate by 31 basis points to 6%. This is the second time in a month and wasn't expected. However, the People's Bank of China has also announced it will not be relaxing tight rules on property buying. The European Central Bank cut its main rate by 25 basis points to 0.75% and cut its bank deposit rate to 0% to try and encourage banks to lend their money out. However, there was some disappointment in the market. Some were hoping for even more action, potentially big new cheap loans known as the long-term refinancing operation, LTRO, or perhaps a bigger cut in the key rate to try and boost that European economy, which is deep in recession. European stocks fell 1.2%. And then the Bank of England came out and announced it was going to print £50 billion more money and use it to buy long-term bonds to try and push down long-term interest rates. This lifts its quantitative easing program to £375 billion. However, all of these easings aren't likely to help much because interest rates are already at record lows and borrowers are just not biting. Either they're already in debt or they lack the confidence to invest. And also banks, particularly in the Northern Hemisphere, are weak and they're reluctant to lend. So central banks seem to be near the effective limits of their ability to move the economy. They're in a way pushing on a string. The next move for economies will be government spending. However, the Dow fell 0.3% despite all this easing. All eyes now are on US jobs data, non-farm payrolls later tonight. We got some initial indications. Jobless claims in the US were actually down and slightly better than expected. So what does this all mean for the New Zealand dollar? Well, because we're not printing money and our interest rates are a very high 2.5%, our currency looks attractive, and so we're up to 80.4 US cents and at a record high this morning of 64.9 euro cents. At a 2-month high versus the pound, 52.8 British pence. I'm Bernard Hickey. That was 90 at 9 from Eurostoxx.co.nz.